Hello viewers. So recently the company Avenue Supermarts, also known as Dmart, has released its latest Q1 result. So without wasting any time, let's move on. So here is the consolidated profit and loss statement of the company. So if you look here at the revenue from operations, then it is reported at 3883 crore rupees. Comparing it with the June quarter 2019, it was reported at 5814 crore rupees. So the revenue has dropped by almost 33%. And if you look at the expenses, company's total expenses, then they are reported at 3875, and in the previous quarter it was at 5318 crore rupees. You see, the major increase in the expense right now is the employee benefit expense. It is reported at 128 crore rupees. In the previous quarter it was at 100 crore rupees, which shows us that it has increased by 28%. The net profit is reported at 39 crore rupees. In the previous quarter it was 322 crore rupees. So the revenue has declined by almost 87%. Same has been seen in the earning per share. The earning per share is reported at 0.62 rupees per share, and the previous quarter it was at 5.18 rupees per share. So yes, this has been the worst quarter for Dmart since its inception. So the reason of the decline in the revenue is not something that you don't know. We all know what's going on. Just to remind you again, the quarter which we are comparing with the June quarter, the revenue comprised of essential goods as well as non-essential goods. But the revenue which we are seeing in the latest quarter comprises only of the essential goods. So you should know this, that the essential products generally have very slim margins. Not much profit can be generated from the essential goods, but the higher profit margin is from the non-essential goods like clothes, shoes, electrical appliances. So the recent quarter does not show that, because the government had strictly announced stores and the retailers to sell only products which are essential. So that's why the revenue has declined. There is nothing more to add there. Okay, I hope the whole profit and loss statement is clear and the numbers are clear. Now let's move on to the management statement, what they have to say. Now, to tackle the situation, the company had started home delivery service. They had created an app called Dmart Ready, and they started to sell the products, to deliver the products in some areas of the Mumbai. But what happened that when the recent announcement came of our respected Prime Minister to start Unlockdown 5.0, then the company discontinued its online operations. Here you can see it discontinued once the stringent lockdowns were withdrawn and our stores were allowed to open. So what you can see here, or you can assume here, that the company is not really interested in focusing on the online sales business. They are interested and focused only on the offline business, which is the sale from the physical stores. So this is an important statement here. Another thing they have added in the conclusion is that they have recovered to 80% or more of pre-COVID sales in most stores. What this line tells you is that the company is expecting its Q2 result, quarterly second results, to be better than the Q1 result. Also, the company has assured the shoppers and the employees that their major priority is the safety of both of them, the shoppers and the employees as well. So you can see that they had employed safety measures, they had given sanitizers and the protection kit to the employees. So this is a very responsible measure taken by the company. But the future revenue of the Dmart still remains uncertain. The reason they have said it as uncertain is because we do not know when this situation will come back to normal, and we do not even know when the lockdown will really be opened up, because there are still some places, parts of Maharashtra, parts of Gujarat, where the lockdown is still going on because the condition is very severe there. So yes, the company has said that the future revenue continue to remain uncertain. So this was about the management stake. Now let's check the stock price. So if you look at the stock price, then the stock closed at 2329 rupees on Saturday 10 July. Now I have opened up a 6 months chart, and the previous result, which was the March result, it was reported somewhere at 21st May. So when that result was announced, then the stock fell by 7%, sorry 11% in that week, and after that then the stock corrected itself, and then it made a high of 2500, and from then the stock is hovering around 2300, which is the current price. Okay, so this is about the stock. Now let's check about the valuation. What is the company expensive or it is cheap, whether you should buy or sell or hold. Now if you look at the market capitalization of the company, then it is at 1,50,000 crore rupees. The stock PE is 147. So what the high PE is showing us, that the investors are willing to pay more for the company. They are ready to buy the stock at a higher premium. They are willing to invest in the company. They have higher expectation from the company. So even though you see in the profit and loss statement, we saw that the numbers are giving us a negative picture, not a positive picture, but the stock is giving us a very optimistic picture. If you look at the stock chart, then it is still at the all-time high. It has not corrected, it has not fallen down. Instead, it has gone up. Now to explain this, I'll have to show you Nasdaq 100. It is American index. Nasdaq 100 generally consists of the company in the technological sector of the America. So the popular tech companies like Google, Facebook, Netflix, Microsoft, Intel, Nvidia, all these companies consist of Nasdaq 100. So if you look at the same Nasdaq 100 chart, then this is the March low. It was trading at 7,500 points, and from there the current level, it has given around 54% return. Here you can see it, almost 54.93, that is 55% return in just 4 months. Now again, this is a very uncommon thing. 50% return given by an index. Stocks have rose by 50%, which is an uncommon sign. We have never seen it unless the situation of the dot-com bubble. So what the investors or the traders are doing is, they are willing to pay higher price, higher premium, because the companies in the Nasdaq 100 are the only companies which are functioning and getting advantage of the lockdown, because they are technological companies. That's why investors are expecting more from the companies, and the companies which are operating in the non-essential sectors are getting undervalued, and the companies which are operating in the technological sector are getting overvalued. So this has created a disparity, and same can be seen with the Dmart stock, because Dmart is one of the companies of India which is operational compared to its other peers like Big Bazaar, which has its business, which has its mall, which has its stores in the mall. So Dmart is the only one of the retail companies which is operational, and that is why the investors or the traders are willing to pay a high price for it, and the stock is getting expensive. So if you look at the numbers, then the numbers are giving you a different story, and the valuation model, the PE, is giving us a different story. PE is giving us a signal that the stock is overvalued. So my suggestion would be, if you would like to call it as a suggestion, or if you would like to call it as my opinion, is that I would rather say to avoid buying Dmart at current levels, which is 2300. I would rather say to buy when the stock gets corrected, because right now the stock seems to be pretty much expensive compared to the result and the numbers. So this is about the people who want to invest right now. I would rather say wait. Now for the people who have already invested in Dmart, so for those who have already bought the stock, for them I would say to hold, because Dmart is a fundamentally strong business. It's not that the management is not doing well or the company is facing internal troubles. What is happening is due to the external uncontrollable situation. So the company is doing pretty well. It is taking efforts to improvise the situation as they can. So if you have already bought the stock, then I would say hold, don't sell. But for those who are expecting and willing to enter at the fresh prices, I would say hold. Okay, so this is my take, this was my opinion. Do not take it as an investment advice, this was just my opinion. Also, if you have your own opinion, if you have your own point of view related to the company, then you can tell me about it in the comment section, because whether it be your opinion or my opinion, both of them matter the most. So do tell it, because other people might also get help from your point of view. Okay, so that's it. Thank you for watching, and I'll see you in the next video.